Hey everyone, and welcome back to the channel. Today, we're diving into a big topic that many of you have asked about: how to set up your very own self-managed super fund, or SMSF, right here in Australia. If you've been thinking about taking more control over your superannuation and investments, this video is for you. We'll break it down into simple, practical steps. Now, a quick but very important note before we start. Setting up and running an SMSF comes with significant legal responsibilities. It's not a decision to take lightly. The information I'm sharing today is for educational purposes. Most people choose to work with a specialist, like an accountant or an SMSF advisor, to make sure everything is done correctly and to avoid any tricky legal pitfalls. So, always consider getting professional advice tailored to your personal situation. All right, let's get into it. Step 1 is to make the decision and check your eligibility. An SMSF can have up to 6 members, and usually these are family members. Every member must also be a trustee or a director if you use a corporate trustee structure. This means you're all equally responsible for the fund. You also need to be over 18 and not under any legal disability. It's a big commitment, so make sure everyone involved is on the same page about the goals and the work involved. Step 2 is choosing the structure for your fund: individual trustees or a corporate trustee. With individual trustees, each member is a trustee. This is often simpler and cheaper to set up initially. The alternative is setting up a company to act as the trustee for the fund, and all members become directors of that company. A corporate trustee can offer more flexibility, especially when members join or leave the fund, and it provides better asset protection by separating the fund's assets from your personal ones. It might cost a bit more upfront to register the company, but it can save headaches down the line. Once you've decided on the structure, it's time for step 3, creating the trust and the trust deed. This is the legal foundation of your SMSF. The trust deed is a crucial legal document that sets out the rules for establishing and operating your fund. It needs to be prepared by a legal professional and signed by all trustees. It will cover things like the fund's objectives, who can be a member, and how benefits are paid out. You can't just write this up yourself. It has to comply with superannuation law. Step 4 is where things get official. You need to register your fund with the Australian Taxation Office, the ATO. You'll apply for an Australian business number or ABN and a tax file number, TFN, for your fund. Once your fund is registered, the ATO will provide you with a notice of compliance which confirms it's a regulated super fund. This is essential for getting the tax concessions that super funds enjoy. You usually have to do this within 60 days of the fund being established. With your fund officially registered, step 5 is to set up a dedicated bank account. This account must be in the name of the fund, not in your personal name. All contributions, rollovers from other funds, and investment income must go into this account, and all fund expenses and benefit payments must be paid from it. Keeping the fund's money separate from your personal finances is a fundamental rule of running an SMSF. Step 6 is the exciting part for many: rolling over your existing super. You'll need to contact your current retail or industry super funds and provide them with your new SMSF's details, including its ABN and bank account information. They will then transfer your super balance into your SMSF bank account. This process can take a few weeks, so be patient. And finally, step 7 is to create an investment strategy. This is a legal requirement. Your investment strategy is a written plan that outlines the fund's investment objectives and the types of investments you'll make to achieve those goals. It should consider things like risk, diversification, liquidity, and the insurance needs of the members. This isn't a set and forget document. You must review it regularly, at least once a year, and update it if your circumstances or goals change. So there you have it, the 7 key steps to setting up your SMSF. From making the decision to choosing a structure, creating the trust deed, registering with the ATO, opening a bank account, rolling over your funds, and creating an investment strategy. It's a detailed process, but breaking it down makes it much more manageable. Remember, running an SMSF is an ongoing job that includes annual reporting, audits, and staying up to date with super laws. I hope this guide has been helpful in demystifying the setup process. If you found this video valuable, please give it a thumbs up and subscribe to the channel for more content like this. And don't forget to hit that notification bell so you never miss an update. Thanks for watching, and I'll see you in the next video.